In 1923 Berlin, two neighbors had identical savings. One kept her money in the bank. The other made one quiet decision that most people had never even heard of. 2 years later, one of them could not buy a loaf of bread. The other used her savings to buy a house at rock-bottom prices, while everyone around her was desperate. Same city, same collapse. One decision. Today, we show you exactly what that decision was, and why people keep making it every single time history repeats. In our last two videos, we showed you something uncomfortable. Every currency in history has eventually lost its value. Not by accident, through a predictable mechanism governments use when they run out of real money. We showed you Jim, who retired on one factory salary in 1971. And Marcus, doing the same job today, who cannot afford a house on two. Today is the next question. The one everyone asked after watching those videos. So what do you actually do about it? Before we answer that, one number. In 1971, 1 ounce of gold cost $35. Today that same ounce costs over $3,000. That is an 8,500% increase. Jim's factory wage went up 850% over the same period. Home prices went up 1,600%. Gold went up 8,500%. This is not a coincidence, and understanding why this happened is the most useful thing in this video. Back to Berlin, 1921. Her name is Elena. Her neighbor is Anna. Same building, same savings, same collapsing economy. Elena's husband works at a print shop. That print shop is printing the money that is destroying their savings. Elena makes a decision that looks strange to everyone around her. She takes half the family's savings and converts them into something the government cannot print. Her friends think she is being foolish. The economy will recover. The bank is safe. By November 1923, a loaf of bread costs 200 billion marks. Anna's savings? Worthless. The number is still in her account. It just stops meaning anything. Elena's decision from 2 years earlier, completely intact. Enough to buy a house while desperate sellers accepted almost nothing for them. What did Elena convert her savings into? Gold. Not because it is exciting, because of 3 properties no government can replicate. 1. Scarcity. All the gold ever mined in human history would fill roughly 3.5 Olympic swimming pools. You cannot print more of it. 2. Durability. A gold coin from ancient Rome, melted down today, is still gold. It does not expire, rust, or decay. 3. Universal recognition. Every civilization across every century has recognized gold as valuable without needing to trust any government or institution behind it. This is why, in every debasement event in recorded history, the people who held a portion of their savings in gold came out the other side intact. Not untouched, but intact. Rome, 200 to 260 AD. As the denarius lost 97% of its silver content, prices in denarius skyrocketed. But the price of goods measured in gold weight stayed almost exactly the same. Soldiers who converted early denarius into gold preserved their purchasing power across an entire lifetime. Those who kept coins in a box watched them become nearly worthless. United States, 1971. The day Nixon cut the dollar from gold, an ounce cost $35. If Jim had taken 1 month's salary in 1971, $627, and bought 17 ounces of gold instead of putting it in savings, what would he have today? At $3,000 per ounce, those 17 ounces are worth over $51,000. The same $627 in a savings account has far less purchasing power today than it did then. Same pattern, Rome, Germany, America. Different centuries. Same mechanism, same outcome. Stay with me, because this is where most people make a critical mistake. When people hear this, they make one of 2 errors. They do nothing because it feels too late. or they panic and put everything into gold. Both are wrong. In January 1980, gold hit $850 after rising 2,300% from 1971. It was everywhere in the news, the obvious move. The people who bought at that peak waited 28 years to break even. The people who bought quietly in 1972 and 1973, before it was obvious, made the 2,300% gain. Elena did not act when the hyperinflation was in the headlines. She acted 2 years before, when the mechanism was visible, but the consequences had not yet fully arrived. This is the consistent pattern across every debasement in history. Gold hit an all-time high, above $5,000 per ounce, in January 2026. It has since pulled back to around $3,000. Many people see that and think they missed it, but look at who is buying. Central banks across China, India, Poland, and Turkey are purchasing gold at record levels, systematically reducing their dollar holdings. These are not small investors reacting to headlines. These are the institutions that manage national wealth. U.S. national debt over $36 trillion. Interest payments exceeding the defense budget. Money supply up over 2,000% since 1971. Every one of these conditions historically precedes further debasement. The mechanism from our last video is not slowing down. So what is the practical pattern across all these events? Elena did not put everything into gold. She kept half her savings in marks because she still needed marks to buy bread today. Nobody timed the market perfectly. They simply ensured a portion of what they worked for was held in something the government could not debase. They treated it as a long-term store of value, not a short-term trade. The Romans who survived with wealth intact had gold alongside their denarius. The Germans who survived 1923 had hard assets alongside their marks. The Americans who understood 1971 had real assets alongside their dollars. The pattern is not complicated, it is just not taught. Which is why most people only learn it after the window has already closed. In video 1, we showed you what an energy shock does to an economy. In video 2, we showed you the hidden mechanism that quietly reduces what your money buys every year. Today, we showed you what the people who understood that mechanism actually did. The pattern across all three is the same. History does not reward the most surprised. It rewards those who recognized what was happening early enough to act quietly, before it became obvious to everyone else. Next week, we go deeper. We look at what central banks actually know that they are not telling you, and why the institution designed to protect your currency may be working against it. Subscribe to Financial IQ so you do not miss it. No noise, no panic, just the patterns that matter.